Hi everyone, welcome to Hustle Muscle Invest. This is a channel where I break down investments from the lens of an average Singaporean. If you're new here, I live in an HDB flat, don't own a car, work in a regular full-time job, and run side hustles in the fitness space. My goal is simple. I would like to grow wealth sustainably through disciplined savings and investments, and also income from side hustles. Today we're looking at a stock in my portfolio, ComfortDelGro. They're Singapore's largest land transport operator. They run our public buses, the downtown MRT line, thousands of taxis and transport systems in the UK, Australia and parts of Europe. Their latest results just dropped, and yes, dividends are up, and it's good news for dividend investors like me, but I would like to go in and take a look at what is boiling under the carpet. Let's go deeper here. Here are 3 wins and 2 worries that I think every investor should know about ComfortDelGro. A quick disclaimer before we start: whatever you see here aren't financial advice and should not be construed as one. This is purely for my tracking purposes only. Without further ado, let's start with win number 1. Win number 1, overseas growth momentum. For the first time, over 54% of ComfortDelGro's revenue came from overseas market. Just a few years back, ComfortDelGro was still mainly focused on Singapore. So what changed? It comes down to smart acquisitions. Addison Lee and A2B in Australia are now fully contributing to its fold. Addison Lee is a premium ride-hailing company in the UK. They were acquired in October 2024 and alongside new Metro Line Manchester contracts. But there's more. In April 2024, ComfortDelGro completed its acquisition of A2B Australia. It is the largest taxi and dispatch platform operator in the country. This move added over 9,000 taxis under major brands like 13 Cabs and Silver Service, and also brought in valuable tech assets such as CapCharge and Mobile Technologies International. With A2B and Addison Lee now in the fold, ComfortDelGro is no longer just a Singapore transport company. It's shaping up to be a serious global player in point-to-point mobility. That shift is also reflected in their financials, with overseas earnings now closing the gap against their home market. They helped push operating profit up 11% year-on-year in first half 2025 results. Now, with third quarter typically being their strongest quarter, especially during Europe's summer peak, overseas markets are now pulling the company forward, not dragging it down like in prior years. For win number 2, public transport resilience and tender pipeline, ComfortDelGro's Singapore rail and bus operations remain a core strength. Public transport profit jumped 40% in first half 2025. And it's not just about current performance, it's about the deals that they're chasing next. ComfortDelGro is bidding for the Copenhagen Metro, the Stockholm Metro, which they've already been awarded for 11 years, Sydney Metro West and Melbourne Train MR5 package, which has a combined value of 7 billion, Singapore's Cross Island and new bus packages. Even winning a portion of these would boost long-term revenue and give them scale in key cities around the world. So yes, public transport may be boring, but it's profitable, sticky and growing for ComfortDelGro. And then we go on to win number 3. Dividend momentum. ComfortDelGro raised its interim dividend to 3.9 cents per share, up from 2.85 cents just 2 years ago. The total dividends over the past 12 months totals up to 8.4 cents. With the share price at $1.54 as of 15th August closing price, this gives you a trailing yield of 5.45%. Their payout ratio is healthy at around 72%, and they're still generating strong free cash flow. For income investors, this kind of consistency is exactly what you want from ComfortDelGro. That said, however, what are the things that investors will also need to worry about? First worry, which is the biggest one, is ride-hailing competition. GrabCab is here. It launched in July 2025 with a growing fleet of hybrids and EVs, plus it's spamming out aggressive driver incentives. For worry number 2, this is what I think concerns more investors that are watching on the sidelines, or even current investors really. Valuation stagnation and growth ceiling. Even with higher profits and dividends, ComfortDelGro's share price hasn't broken out. It's been stuck between $1.30 and $1.60 for more than 2 years. Forward PE is 14.5 times, and earnings per share is only projected to grow 4 to 5% per year from here. Yes, they're investing in EVs, autonomous vehicles, and ESG, but these haven't turned into bottom line gains yet. So if you're hunting for capital upside, this may feel more like a slow grind than a rocket, if I'm being honest. So as a takeaway, ComfortDelGro is becoming more global. They're paying stronger dividends and chasing some seriously big transport deals. As an investor myself, I do like how they're paying very stable dividends, and it's also increasing, but they still face tough competition and growth isn't exactly guaranteed. Let me know in the comments if you're holding ComfortDelGro like me for the yield, or if you're just waiting for a better entry point. If you enjoyed the breakdown, please help to like the video and subscribe to the channel. It will help a lot, and stay tuned for more breakdowns of stocks and side hustles. Thank you for watching.